Hi, everyone. My name is Lena Castanos, and I will be moderating today's webinar. I will begin by introducing the Capital Pathways program. Then I will introduce myself and give the word to our guest speaker, Jamie Dion, who is a QuickBooks Pro advisor. And she will be introducing herself and taking us through a presentation on QuickBooks. This presentation will be very hands-on. And the chat function will be enabled so that you can ask any questions throughout the presentation. We will be responding to them as we go, and we will be stopping after each section of the webinar for questions and for you to actually do some of these tasks on your own computer. The questions that we cannot address in this webinar, we are happy to address them through our no-cost one-on-one services or connect you to resources that can help. We will be sharing a recording and slides of this webinar afterwards via email. So what is the Capital Pathways Program? The Capital Pathways Program is a program funded by the U.S. Treasury SSBCI initiative, which is sponsored by the Virginia Department of Small Business and Supply Diversity and hosted by the Virginia SBDC and George Mason University. So we can start with the program overview, then we will go through the program eligibility and finalize with its services. Capital Pathways is a no-cost specialized SBDC program that helps small businesses build the systems and habits needed to become capital ready. Why does it matter? Being capital ready matters because those less prepared self-select out or fail applications. Early failures correlate to lack of adequate capital. Higher cost alternatives don't build long-term capacity. Only half of requested amounts reach small businesses. To put things in perspective, about 25% of small businesses need access to financing for growth and preserving cash flow. However, just 20 to 30% of those who apply for loans actually get their loans approved. Capital Pathways creates a path to financial and legal readiness. Our program offers an immersive, hands-on group experience paired with one-on-one support. Who is eligible? Very small businesses at any stage facing challenges accessing traditional financing. The services that we provide include a guided self-assessment, legal structure validation, financial skills and tools, and loan application readiness. We start with a self-assessment that pinpoints your business's key gaps so we can connect you to the right tailored resources, either through our Capital Pathways program or other resources that can help. Under our legal structure validation, our in-house advisors can help you through more basic legal questions, and we partner with a law firm which can help you for more complex topics related to business registrations, trademarks, and contracts, and agreement reviews. We also offer financial webinars on topics including financial basics, financial statement preparation and analysis, and QuickBooks trainings like today's. Another one of our webinars of our offerings includes one-on-one individualized and tailored support on business foundations, profitability and pricing, financial forecasting, financing options and readiness, financial statements and tools, and loan readiness and lender prep. Finally, our loan application readiness services include both webinars and one-on-one individualized support. The webinars are on topics such as what lenders look for in loan applications, interactive mock loan interviews and sample application analyses, and SBA loan options. We also have a partnership with a lender that provides one-on-one support to those looking for capital. If you are interested in getting started, you can reach out through our website or by scanning this barcode, this QR code, and I will be putting the link to the website on the chat as well as my email in case you prefer to reach out to me directly. All right, I will give it over to Jamie now. Actually, before doing that, I'll introduce myself. As mentioned before, my name is Lena Castanos and I am today's moderator. I have a professional background in economic development, small business support, and access to finance projects domestically and internationally. I am currently both a program lead and a business advisor in the Capital Pathways program. Today's session will consist of a 2-hour presentation. Again, feel free to ask any questions throughout the presentation via the chat function. We will be responding to them as we go. We will stop every here and there for questions after each section. The questions that we cannot respond to in this webinar, we are happy to address through our no-cost one-on-one services or connect you to resources that can help. We will be sharing recording and slides of this webinar afterwards. Now I will give it over to Jamie to introduce herself, tell us a bit about her background, and start her presentation.
Thank you, Lena, and good morning, everyone. It's wonderful to have you here. My name is Jamie Dion. I am the owner of Balanced Bookkeeping based out of Charlottesville, Virginia, but working with clients throughout the US. I before starting my bookkeeping business, I was a teacher, and in order to scratch that itch I always have of teaching others, this is how I pay it forward these days with QuickBooks and financial planning workshops and webinars. So I'm glad you're here. I'm hoping that I can make this a little bit more approachable. That QuickBooks Online could be quite overwhelming. So kudos to you all for being here. The goal today is to set you up for success with the basics of QuickBooks Online. Like Lena said, we're going to have about an hour and a half of instruction. It's going to be interactive instruction. And so I'm going to show you a feature of QuickBooks, and then I'm going to give you about 3 to 5 minutes to explore, experiment, make mistakes, all of that good stuff. With me being here to help you, to support you. And the beauty of all that is that QuickBooks has created something called the test drive. I put it into the chat box, the link. You can also type it in manually if you'd like. This test drive is a mock QuickBooks file that we can really play around with and not face the repercussions of messing anything up. This is a link that is constantly active. So even after this presentation today, you can come back to it and fiddle and explore and experiment before applying any of the actions that you might want to on your personal QuickBooks, okay, or your business QuickBooks. So what I would recommend that you do right now is split your screen, have half of your screen be me and have the other half be the test drive so that you can kind of go back and forth easily. All right. Please do that now. I'm going to share my screen. Oh, Lena, will you thank you. All right. And we're going to get right into it. I do want to say that for QuickBooks, there are 4 main subscription levels. There is Simple Start, there is Essentials, there is Plus, and there is Advanced. My rule of thumb is to start with the simplest subscription level, which is Simple Start. That will run you at about $38 a month. So it's an expense from the get-go, right? And then as your business expands and you find the need to have the higher subscription levels, it's very easy to upgrade and downgrade. So that being said, if you already have QuickBooks and you have Plus or Advanced and you're not using those capabilities, know that you can downgrade to have a lower subscription level, a lower annual cost, monthly and annual cost. Okay. All right. Let's get to, oh, the last thing I want to just clarify is with us, I'm going to be showing you a feature, and then you're going to have those 3 minutes to explore on your own. During those 3 minutes, that's when I'm going to be looking in the chat box to answer any questions you have. Try to have those questions be related to the topic that we're discussing, or the feature that we're discussing at that point, so that it can be complementary to what we're learning about. If you have any like left field questions that you really want answered, we'll have about 30 minutes at the end of this webinar to go over any other questions you might be frustrated with, wondering about. The last thing I'll say for housekeeping is QuickBooks 201 is next month. I think it is October 15th. Lena will have to confirm for me. So that's when we're going to go into some of the more complicated features of QuickBooks, like bill pay and journal entries and sales tax, all of those a little bit more in the weeds approaches. Today is really about getting you set up for your monthly workflow so that you can be closing out your books monthly and filing those taxes when the time comes, which is not so far away. How are we already in the end of September 2025? Not sure. All right, let's do it. So when you log into QuickBooks, you will come to this dashboard, right? This is like your home screen. QuickBooks is trying to make sure that you have everything you need in one place. To me, this is a little bit overwhelming, especially if you're not using a lot of this. So my first recommendation for you is to customize this a bit. All right. You can click customize. You can move things around. You can add or remove widgets, right? Say what you want to see, what you don't want to see. Like, this isn't important to me. Work requests, I don't need that. To have this be a little less busy. You can also adjust what your shortcuts are. So if I'm not I'm going to rely on my bank feed for expenses, I can remove that. But I am a contractor and I'm going to create estimates often, right? Set this up so that this looks like an actual to-do list for you. All right. Some of the things that are great to be checking out, this tasks area, QuickBooks is keeping track of anything that's overdue or maybe unsent um, in this QuickBooks file. For example, this morning I went into my personal QuickBooks and I had one that said that one of my sales receipts, my recurring payments to one of my clients, was unpaid. It was denied. So that was right here. That made me be able to go to my client and say, hey, the payment failed for some reason. Can you please pay this? Right? So don't disregard this dashboard. You also have your bank account, so you can see at a glance what your balances are looking like, your profit and loss for the last month. I think this is great to see. You can also adjust based on what matters most to you, right? I want to know the fiscal year to date. Your invoices, right? A quick glance of what's overdue. I better start collecting $1,500. I want that money, and what's been paid, right? So if you even just a couple minutes, you can really grasp a lot about what's going on financially with your business on this dashboard. Over to the left-hand side, this black toolbar, this is where most of your actual functions are going to be. So when you're doing things in QuickBooks, you're probably going to come over here to trigger that action. Transactions, this is where most of your monthly workflow is held, right? This is where we're going to hang out a lot today. Your bank transactions, this is where your bank feed is coming in. Reconcile, we're going to reconcile our accounts on a monthly basis. And then your chart of accounts, this is like kind of where your skeleton is, which we'll talk about more in a little bit. Again, if you look at this toolbar, there's a lot here. a lot that I actually don't need, right? So I'm going to come down here, menu settings, customize this menu, and get rid of the things that I don't need, right? I don't have any employees, so I'm going to get rid of payroll. I am not doing I have the lowest level in QuickBooks, so I can't even do budgets. I should get rid of that. I don't need a loan. I don't have commerce, right? And let's make this a lot more approachable, okay? Up to the top, this plus new button is where I can add any new information to my QuickBooks file. So if I need to invoice a customer, I can do that here. If I need to add a bill, that's over here under vendors. That journal entry that I mentioned earlier, this is something you'll have to do at least a couple times a year. That's here. Adding any new information is where you're going to go. The plus new is where you're going to go. The last place I'm going to show you about on this initial dashboard before I give you some time to explore is over here in the right-hand side, this gear icon. Now the gear icon, this is more of all of the back end information for your business. And so when you subscribe to QuickBooks, there's not going to be all that much within these different accounts yet, right? And so while going through a lot of these would be informative and helpful, this accounts and settings tab, I highly recommend that you go through here and make sure that everything is up to date and accurate, right? So make sure that your address is in here because or your business address, because that's where they're going to pull for all of your invoices and your bill payments. They're going to pull your address from here to add to those invoices and bill payments. Same with your phone. If you add an industry, QuickBooks is going to customize your experience somewhat to feel aligned with that industry. You'll want your EIN in here. You can see, right? This is obviously the dummy account, so we don't have that much information here. Over here though, right, sales, this is where you'll customize how you want to be sending out invoices. Are you going to accept discounts? Do you want to accept a deposit for invoices? You can add your messaging in here for what you want your invoicing to sound like, right? So right now, if you're in your real QuickBooks, this is all very generic. But whoever your brand as a business is, you can adjust so that it sounds like your brand. Like maybe I don't want to use full names. I want to just use first names and keep it more casual. Okay. So a lot to explore right now. So what I want you to do, go ahead, check out the dashboard, experiment with customizing it, making it a little less overwhelming for you, or maybe a little more overwhelming, depending on how you work. Click into things, right? Click over into this black toolbar, see what tasks and what options you might want to be using in QuickBooks. Look at the plus new. Do all of these buttons take you? And then finally, this gear icon. Check, maybe read through this, see what might pop out for you, things that you might need to use. Okay, so let's use about 3 to 5 minutes right now. You go and see where these buttons take you. See if you can start to get a feel for what this QuickBooks dashboard does. And I will start answering questions if there's any in the chat box.
Someone,
Ooh,
yeah.
yes, Deanne. So I meant to say this. So QuickBooks, being QuickBooks, is always changing their interface. So this QuickBooks, Craig's Design and Landscape, this is like about 50% of clients look like this right now, and 50% look like the blue and the purple and the green colored QuickBooks Online. While they look a little different, the true structure of it is largely the same. So you should still have your black toolbar is now gray, I believe, and you'll want to click where it says accounting or apps to get to all of these. Like they basically added another level. Okay. You should still have the plus new, you should still have the gear, you should still have all of these different buttons. But yes, I've told QuickBooks they need to create a new test drive for the new setup. It is coming slowly. So bear with me. Okay. Uh, you can do everything on the new one that you can on the old one. It's just going to take like a couple maybe extra steps. Yep. So Dan says it says plus create, right? Instead of plus new. Yeah. Sometimes I'm not sure about QuickBooks as the QuickBooks Pro advisor. Jamari. So they are asking to merge. Yes. So you can migrate, Jamari, from QuickBooks Desktop to QuickBooks Online. They have a lot of support, right? They want to keep you as a customer. So use that support. What they're going to want you to do is make sure that your QuickBooks Desktop file is really clean and that like you don't have duplicate accounts, all of your invoices that have been paid have actually been paid, all of the bills that haven't been paid actually haven't been paid, so that when it comes to QuickBooks, it is seamless. If it's really messy on desktop, it creates it into a huge mess on QuickBooks Online. But long answer short, yes, you absolutely can bring it all over. I see your follow-up. His follow-up is, do you recommend desktop or online? Definitely online. They're trying to push out desktop, and I'm sure you've seen the prices just keep going up really exponentially year over year. And you also don't have access to QuickBooks support in desktop anymore. So online is absolutely the way to go. I think I feel very confident in saying that now that you need to get over there. Um, Veronica asked, "What's the difference between QuickBooks and Quicken?" So yeah, totally different software, right? It seems like they should be the same, but nope, totally different software. Quicken, I believe, I honestly don't work with Quicken at all. I'm pretty sure that's more of a personal side of accounting, right? It's for like home financing. Dan asks, I typically use my iPad, but some features don't seem to work the same on my desktop. Is that normal? Yeah, so they have two different settings, like two different formats. You should be able to do everything the same, but more so on your desktop, on a screen. Like I'm assuming that you're on the app, right? QuickBooks app when you're on your iPad, or are you on like a browser? Yeah. So the app, right? That the app is really made for like on the go. So like I have it on my phone to take receipts and to do I would say that as a business owner, you'll want to go on to a browser. So even if you're on QuickBooks on your iPad on a browser, you'll have all of the capabilities except for just the capabilities on the app. All right. Did everyone explore a bit? See anything? Have any other questions? Again, right, QuickBooks is trying to be the solution for all businesses, right? And it's up to you to customize this so that it's the solution for your business. Okay. So it's going to take a little bit of time at the start, but if you can set this up so that it reads like your business, you're going to be able to do all of your business finances much more efficiently, make better decisions for your business by looking at your data. Really, it's a magnificent tool, and so I want you guys to really reap the benefits of using this tool. All right, we're going to now go to our chart of accounts. So to get to the chart of accounts, you're going to go to transactions, chart of accounts. All right. So your chart of accounts, like I had mentioned a little bit earlier, this is the skeleton, the foundation of your business. So in other words, I want to be able to look at this chart of accounts and read through it to understand how you're bringing in money, what you're spending money on, what assets you have, what your financial picture is, right? And so there are five. Oh no, sorry. All right, there are five different types of accounts. All right, we have assets. So these are things that you hold, typically cash, right? Funds that you hold that you could disperse or sell for cash if needed. So that's going to be your bank accounts. That's inventory that hasn't yet been sold. That might be a vehicle or a building, land, machinery, right? Typically, we say an asset is $2,500 or more. Okay, so we wouldn't consider like my printer, which is $100 an asset, right? That's just a small tool that I use for my business. Okay. Um, Next comes liabilities. So your liabilities are your bills, your credit cards, loans that you might have. That's also your sales and meals tax that you collect on behalf of your customers if you sell a good, right? Then we have equity. Equity is the amount of money you as the owner put into the business or take out, right, as a distribution or an owner's draw. Then we come to the more common ones, right? That everyone should know. Your income. This is all of the ways that you bring in money to your business. This is a little substantial. Like to me, this is too many income accounts, right? You can absolutely split up your income streams. I think that that is important, but this is a little overdoing it. So I'll give you my example, right? So I use my financial data to make decisions, right? Like I look at them monthly, but I really look at them annually and decide, am I going to take on how many new clients should I take on this year, or should I continue to do webinars and workshops, or is that not bringing in sufficient revenue? Do I need to raise my rates, right? All of these decisions I break up in my income. So I have my recurring revenue, I have my one-time projects, and then I have like my consulting speaking income, and I'm able to see how much money I'm bringing in every year for that. And so thinking, if you're a restaurant, is it worth it, probably, to see how many storefront sales are you getting versus how many catering sales versus how many private events, um, right? Like will you be able to make, or how many wholesale, will you be able to make informed decisions by looking at that? So sometimes people have just one sales account. I say maybe think a little bit more strategically than that, but probably not what 20 that Craig has right now. Your cost of goods sold, this is an expense. Like we would want to blanket it with the expenses, but cost of goods sold, these are your materials and labor costs that go directly into creating the good that you're selling. So um, back to that restaurant, that would be your food cost. That would be maybe people that you're hiring that are in there making the food, right? And then we go down to your expenses. This is more of your operating expenses. So thinking about all the different ways that you're spending money in your business that keep the lights on, keep your business afloat. So advertising, you can see dues and subscriptions, job materials, your legal fees. Okay, so when QuickBooks creates this for you, when you sign up for QuickBooks, they're going to ask you, what industry are you in? How many employees do you have? They're going to ask you some strategic questions, and they're going to create a template for you. Now, for a while there, QuickBooks was creating templates that were like 300 plus accounts long, which is way too many accounts. Okay. Now they're creating templates that are really small, like 20 accounts. And so we want to get kind of right in the middle there. Like I think that for most small businesses, 50 to 75 is the sweet spot in terms of accounts. We don't want to have an itemized account for every single transaction. So like for example, QuickBooks fees, Canva fees, my Google Gmail fees, right? Those all don't need to be their own account. We can put those under dues and subscriptions. Does that make sense? Now, depending on what QuickBooks gives you, right? You'll either need to inactivate a lot of these or create a decent amount of accounts. So to inactivate, all you need to do. So let's say that he decides um, he's done selling or installing sprinkles and drip systems. All you need to do is click over here, make inactive. All right, and this will remove it. Hopefully this does. Let's see if it's with the product. Yep. So that was deactivated. It was removed from my income. Now it's easy. So to reactivate, I'm going to go to the settings, include inactive, and then we have it here. I can make it active again. Okay. So what I recommend you do is make your chart of accounts look like your business today. A lot of clients that I work with are like, but I really want to scale. I really want, this is going to be huge. I'm going to have payroll in 2 years. Like I'm going to have these things in a couple years. And what I say is, let's have it look like your business today. And then come a year from now, it's fluid. You can add accounts, whatever. Okay, we can reactivate accounts. To add new accounts, right? Well, we're going to do plus new. You'll add a name. Let's say, let's do meals, right? We'll add what the type of account is, expense, and then you'll choose the detail type. What this detail type is, this is if you have TurboTax, they speak to one another to bring it over into your TurboTax. So something to consider. You can also make it a sub account. So if you want to group a lot of accounts together so that you can see like the total amount you're spending, like say for example cost of goods sold, right? You would have a cost of goods sold account, and then below it, underneath it, you would have food costs, supplies and materials, costs of labor, so that you could see your total cost of a good sold and then the several that nest underneath. All right. Another thing you can do is customize what these names are. So instead of inactivating and then creating new, right? Let's say that Craig doesn't have a bookkeeper, but he has a business coach, right? And I've never used bookkeeper before. So I could do the down arrow edit and just change the account name to what I want it to be, right? Business coach. Need to move Lena. Your head's in my way. And click save, right? And now I have business coach under the legal and professional fees. So here's an example of the parent account and the sub accounts, right? And now it's there. So this is something that you should absolutely do when you start your QuickBooks account. If you have had your QuickBooks account for a while and you haven't done that, this is your number one homework to do today, okay? Going through this. I am going to give you 3 to 5 minutes right now, right? To go through here to really brainstorm what you want your chart of accounts to look like. I'm going to preface that this is something that should take much more than 3 to 5 minutes. This is something that you might want to meet with a business advisor or a business coach, or or if you have a bookkeeper, or an accountant, or even someone in your industry that is doing the work already and that has a good handle on their books, right? You want to put some time and effort behind having this set up well, because this is what is going to get this is how you're making your reporting. All of this information pulls to your reports, which is how you're going to make business decisions. All right. So go ahead. You have 3 to 5 minutes right now to go through this and fool around, right? Again, the beauty of using Craig, you can really mess things up and it doesn't matter. So see if you could inactivate some things, see if you can create a parent and sub account for something, change some names, change some account types, really see how that feels and what actually happens when you make those adjustments. And then we'll go back to the chat box.
And I would like to point out that there are some questions in the Q&A as well.
Okay. Okay.
If
So
you want, I can say those out loud if that's helpful.
okay, let me go through the chat box and then I'll go over to the Q&A. So Marnie says, I don't have most of these buttons. Is that because I'm in QuickBooks self-employed? Yes. So I would say with self-employed, yeah, you don't get all of these features, definitely not. So Marnie, for today, use the test drive. I would start thinking also, Marnie, if it's time for you to be on the true QuickBooks subscription, self-employed to me is not it's really hard to use well, right? Because you're doing like personal business. They don't let you customize anything. It's really, really bare bones. If you have a bare bones business, sure, right? Stay in that. But people, it's just there's lots of constrictions with the self-employed that make it not a very wonderful, useful tool. Don't tell QuickBooks I said that, but that's how I feel. Anna asks, is this from one bank account or can we have several? Yes, we're gonna have several. That's the next place we're going, Anna, to show you where the bank feed is. So yes, you can have as many as your business has. Margarita says, would gas and meals receipts be uploaded into expenses? Yes, right? So we want to make sure, and this is the beauty of QuickBooks, right? Is that we want to make sure that you all are getting every single possible deduction you can. And so QuickBooks is helping us to basically put all of these expenses into buckets. So if you own your vehicle and you are just going to the pump, I mean, your business owns the vehicle and you're just going to the pump and filling up the gas tank, yes, we're going to recognize those receipts in QuickBooks. Same with meals. If it's a business meal, right? That's a very triggered one with the IRS. We want to make sure that it is a meal with a client or a team meal or a networking meal, not just me picking up a coffee on the way to work, right? That's going to get argued against if you ever got audited. We don't want that to happen. But yes, we're gonna talk about receipts. Not today. That's QuickBooks 201. But it's very simple to do. If you want to use QuickBooks, you can absolutely use it as a receipt management. Maybe we can talk about that in the Q&A at the end, Margarita. All right. Taines, I'm not sure if I'm pronouncing your name right, but so they ask, what's the difference between QuickBooks balance and bank balance? So great question. Let me get over here. So if I'm looking here, we're going to go to the banking tab next, and I'll explain it further. But basically, what this is saying is QuickBooks balance is the amount that QuickBooks has categorized in this software versus this is what the bank is communicating with QuickBooks that the balance is. So, in a perfect world, and in a world for all of you, these numbers are going to be the same. I'm going to show you in just a minute why these numbers are not, obviously not right now, but your goal is that your bank and QuickBooks are reporting that the same balance is in both, right? QuickBooks is just a software. That's all it is. It's not a bank. And so we can't trust QuickBooks has accurate information until we do something called reconcile. which we're going to talk about in a few. And when you reconcile, you should have the bank balance and the QuickBooks balance be the same. All right, and I'm going to show you, it'll make more sense in just a bit. All right, let me see if there's one more. I saw one more question. Yeah, so anonymous attendee, they don't have these buttons because the self-employed. Yeah, so self-employed, really self-employed is meant for people who like Uber drivers or like people who don't even necessarily have like a business bank account, or that it's almost like more like freelance is what I equate self-employed to. So if you have a legitimate business where you have lots of expenses coming through, you have lots of different income streams, I think it's really tricky to have accurate books in self-employed. You're unable to break up transactions, split transactions. You're unable to do a lot. If you can and you've been successful so far, then then keep at it. But I find that it's really tricky, and I'm a proponent of moving. Okay. Fari asks, what is uncategorized asset? Great question. So QuickBooks has these accounts. You'll see them all over the place. Uncategorized asset, uncategorized income, uncategorized expense. So this is on the next page. This is where QuickBooks puts things that they aren't sure where they go. And we really don't want to use these, right? Remember, the bare bones goal of using QuickBooks is to file your taxes, right? If you're like Jamie, you're crazy. I'm never going to look at my financials throughout the year and make decisions. So be it, right? But at the end of the day, this is the software that's going to help you to file accurate taxes. And so when we think about a tax return, they have specific accounts that we're going to put the totals in. So we're going to put taxes and licenses, whatever this total is for the year, that's the number we're going to put on our tax form. There is no line on the tax form that says uncategorize anything, right? So our goal is to always keep these empty. If anything gets in there, we want to move it to the correct account. Basically, they're just guessing. So we want to avoid that. Unfortunately, you can't make it inactive, right? They won't do it for us. You're kind of stuck with it. But I say don't look at it, don't use it, avoid it at all costs. All right, see, it's not letting me do it. All right, we're gonna keep rolling. So now we're gonna go to the banking tab. So we're gonna answer that question of why are these numbers not the same, okay? So we're gonna go to transactions and bank transactions. And if you've never done this before, I say yes, watch these little videos. This same pop-up will pop up when you log into your real account, okay? But this is what your banking tab looks like, okay? You can see Craig, he has his checking account linked, his savings account linked, and his credit card linked. Just like someone had already asked, you can link as many credit cards, savings accounts, checking accounts that are business. Okay, do not link your personal stuff in here. Okay, it's going to create a big mess. To your QuickBooks file. To link your account, you're going to click link account. You'll put in whatever your bank is. Okay, it's not going to let me obviously because this is a test drive account. You'll put in your online login information, so your login password, and then it's going to ask you when do you want to start syncing data from. So if you're doing this today, I highly recommend that you do from the start of whatever tax year you are in. So if you file your taxes on the on the calendar year, right, like most people do, you would put January 1st, 2025 as the sync date. All right. If you have a different fiscal calendar, you'll put in the start of that fiscal year. What will happen is QuickBooks is going to pull all of your banking transactions for the year. Okay, you can see Craig is up to date as of July. Excuse me. Now, all of these are not recognized yet on that chart of accounts, right? I've only categorized $1,200 worth of QuickBooks information. Like this is the balance based on what I've categorized so far. And if we can see, again, this is all fake, but if I clicked on categorize, you could see all my income and expenses that have come through on this tab. So your job is to categorize all of these expenses, right? So if I see this, let's do a rental. Okay, so you can see, so the bank and QuickBooks speak to each other. And so they tell you this exactly what is on the bank detail that comes through their bank, right? So A1 rental, if you looked at your bank statement, it would say the same thing. Okay, you're going to add the vendor, right? A1 rental is the vendor that I used. You can add all this information if you want. You don't need to. I don't. So I click save. And then you're going to click the account. This is the chart of accounts. Okay. Here's another reason that you don't want to have 300 accounts is because you'll be scrolling all day, right? So you want to have it be really succinct in terms of what you're actually spending money on, bringing money into your business. So A1 rental is rental, right? Equipment rental. So I'm going to click that as the account. This is going to move this transaction to my reporting. So once I click, Lena's head is in the way again. How dare you, Lena? Once I click add, it's going to go to my chart, to my reports, right? It's going to go to my register. It's going to go away. Let me click add. Oh. Another way to write your account is to type it in. I think that's a lot faster. So I'm going to say equipment rental and add. Okay, and now you can see it's gone. The $800 one is gone. Now, here's something that's really important. So as you're categorizing, it's really important that you have consistent, like you put the same expenses in the same accounts every time. So like if I go back to QuickBooks, right? Technically, so I would put QuickBooks in dues and subscriptions. However, technically it could go into software as well, right? Those are both fine places to put QuickBooks. There is no right or wrong. On the tax form, you're going to get the deduction either way. So it doesn't matter. What does matter is that we put it to the same place every time. Okay. So for A1 rental, I say, I have no idea where I put this transaction before. Like, how am I going to figure this out? If you click this button that says categorization history, it's going to tell me where I've put it in the past. All right. So you can come here to make sure that you have that consistency and assign category. And now it's gone too. Okay. Your monthly workflow is to go through these and get these to zero. So I have 23 transactions right now that still need a home. I have one here, right? I can do a match here. I want this green check mark. Something seriously still wrong, right? I don't have the right bank balance and QuickBooks balance, but this tells me that I've categorized everything. Okay. Now, let's go to, all right. They've done everything for us these days. Let's say that this one. So what's happening here is that Craig has been adding his bill payments to QuickBooks, which is something you can do. So you actually, if you're on your own and this is like one of the many hats that you have, you can also just categorize like we did A1 rental when it comes through your bank feed. So you don't necessarily need to be keeping track of your bills and your bill payments in QuickBooks, unless you want to. Unless you have cash flow issues, and it would be important to make sure that you have those checks that are outstanding, knowing what those balances are. This is best practice, but not necessary for a lot of really small businesses. But let's pretend, right? Books by Bessie. Let's pretend this is continued education, that I bought $75 of books at the local bookstore, Books by Bessie. So I don't have continued education as an expense yet, right? That's not in here. It's not in my chart of accounts, but I want to add it. You can add it directly in the bank feed. I wish that it kept my name, to save you a couple seconds, right? Now, when you do this, you can't, it's a little bit harder to see, do I want this to be a sub account anywhere? I'm not going to. But that is a solution to save you a little bit of time. Otherwise, you'd want to go back to transactions, chart of accounts, and add it that way. Keep in mind too, if you want to, you can add memos. So I could say book on how to build a deck, right? You can add the invoice or the receipt directly to it. These are all dependent on how detailed you want to be with your books. All right. So go ahead and explore. See if you can categorize some of these things. See if you can get these balances to maybe actually be balanced. And then I'm going to show you a really great tool for when you're in here. This is where you're going to spend most of your time. All right. This is the main lift in terms of monthly bookkeeping. Okay. 3 minutes. Go for it. So Fari asks, we have a credit card which is not working. It's not a working card. Can I inactivate it from my chart of accounts? So here is a big one. Okay. You should not inactivate any banks, credit cards, loans until you have a zero balance. So what that means is if there's a number next to that credit card account that you want to inactivate, that means we don't have all of those transactions that need to be in there, right? So for example, if it says 1,000, right? If you closed a credit card account, you wouldn't close it with $1,000 of debt in there, right? Or the bank the other ways. You would get it down to zero. So that means that we are missing something, right? We might be missing a transfer, we might be missing a payment, whatever that is. You want to get that balance down to zero, which we would do from reconciling, which we're going to talk about in a little bit, before you inactivate it. Okay, so don't inactivate it quite yet. If you have a balance, if it's zero, you can get rid of it. Yes. All right. Fari asks, what category is best for QuickBooks subscription expenses? I think that's up to you, honestly. If you're going to make financial decisions like dues and subscriptions, that and software, honestly, both of them are categories or expenses that people kind of get out of control with really easily. So if you have a little bit of a problem with having subscriptions and forgetting about them, then I would put it in subscriptions so that you can have awareness over it. If you don't, it's totally up to you. Just keep it consistent. You also ask, I go to many conferences. Now all the questions are coming in. Good job, guys. I'm glad you're engaged. All right, I go to many conferences with a setup table to introduce our business to potential clients. Therefore, we put many sweets or goodies for people. What's the best category? I would say advertising and marketing, right? That's your goal. You're looking for sales from those. That's where I'd put it. Deanne asks, what if you do not have the bank account linked? Good question. So I highly recommend that you do it. Okay. Um, when QuickBooks talks to your bank, it's a one-way street. So it's your bank giving QuickBooks the data. Okay. It is not QuickBooks going into your bank in any way. Okay. It's like there's a gate there, I promise. So it is secure. I know it feels insecure, but it's not. Also, anytime that any changes happen to your bank, it automatically unlinks from QuickBooks. Okay. So as a protective measure. So I have been doing this for years and I have never run into like something happening between QuickBooks and the banks. That being said, right, your business is your business. You can do as you please and what you feel comfortable with. If you don't link, you can upload CSV files on a monthly basis. So to do that, you would go to your gear icon, you would do import data, you would add bank data, you would pick the account that you've already created, right? Checking unlinked. And then you would upload, obviously I don't have one, upload your CSV file. All right. There's a couple of like checkpoints after you upload to make sure that everything is coming in right. The main thing that happens that you want to be really cognizant of is making sure that expenses are in a negative number, right? They have a negative before them and deposits are positive. QuickBooks will get confused on that sometimes, and there's a simple button at the top that says like switch positives and negatives. Like it's really simple. You just want to make sure you do it before you import all of that data the wrong way. Otherwise you have a little bit of a some cleanup to do. Jamari says receipts taken on QuickBooks app can be uploaded to the QuickBooks Online and then later attached to the logged receipt, just as you mentioned. Yep. So let me get out of here. So I'll talk about this really quickly right now. But so if you have the app, the QuickBooks app, you see they're trying to tell you to do it right now. You can take a photo of your receipts on the go, and they will automatically come right here. Okay, and then this is a dashboard, and so then QuickBooks will use AI to match the receipts that you have uploaded to the transactions that you have categorized. You have to categorize them. And then over here, there's a button that says match. And then you'll click match and it will go directly to these bank transactions. Okay. You can also, as you can see, you can also upload them you can add them from Google Drive. You can upload them from your desktop. They're making it really simple. You can add a lot at once. So like if you have a folder on your desktop, you can just drag it over. Here is my caution. To me, you are giving a lot of power to QuickBooks Online by having all of your receipts. Like if that's the only way, you're basically stuck with QuickBooks forever, right? So they can up their rates a ton. They can do whatever they want. Basically, you're at their mercy. I personally keep my receipts in a Google folder that is titled 2025, and within that folder is every month, and I drag and drop mine in there. And that gives me a little bit more I don't know the word. I feel more comfortable knowing that it's in a unpaid, well, $6 a year business Google account than this QuickBooks that is a high rate, right? I want you to be able to have access to all of your receipts always, if you ever got audited, because really you should be holding them for 3 years minimum, right? So that's my 2 cents. Yes, it works great. It's easy. If you want to have QuickBooks be your one-stop shop, you feel like you're confident that you can pay that monthly rate always, then yeah, QuickBooks is great. Zakia asks about personal expenses. I'm gonna make personal expenses. I'm gonna make a note for you, Zakia. We'll talk about that when we get to the Q&A at the end. Margarita, we're gonna talk about home office at the end as well. All right, you're right. Yes, that is all right, what you said. Amy's leaving. She's gotta hop off. All right, and Darcy, got it. All right, we're gonna keep rolling. Oh, let me look at the Q&A. Sean and Elizabeth, great question. So they said, you mentioned the 5 types of items: assets, liabilities, equity, income, and expenses. Where in QuickBooks do these categories come in? Yes, we're going to talk about that in reporting in just a moment. Okay. I will answer your question. All right, we're going to keep going. Okay. Here we go. So, something that you might have noticed. So I'm actually going to undo these. Okay. Something you might have noticed when you were categorizing, right? A1 rental. This is equipment, right? I know that A1 rental is always an equipment rental, right? I never use A1 rental for anything other than renting equipment. That kind of makes sense, right? To save you time, you can create a rule. I'm going to name it A1 rental, that every time that money comes out of my account in my checking, savings, MasterCard, like whatever, this is where you get to be really customized if you want to, and describes includes the description of a rental. QuickBooks is going to categorize it as an expense, that the category is equipment rental, and the payee is A1 rental. Okay, sounds great, right? At the bottom, you also have the option to have QuickBooks automatically, when this comes through your bank, put this into your reporting. So it would not ever be in your bank feed. It would go directly to your reports. Now, while this sounds great, I recommend always turning this off so that you can have your eyes on it just for a moment, okay? Before and have you be able to confirm this. Here's why. Number one, while you might use a vendor 99% of the time for one type of expense, that other 1%, we want to make sure that it is on the books accurately. And so if you just see it for that 1 microsecond, then you're able to put it to the right category when those outliers happen. Like for example, Amazon. Amazon's one that I don't recommend making a rule for, because yeah, you're probably buying office supplies most of the time, but what about the continued education that you might buy a book from Amazon, or some for office furniture, or some equipment, right? We want to make sure that you really truly have accurate books. If you're like Jamie, I am all about efficiency, I'm turning this on. My proposal for you is turn it off just for the first month. Make sure that all of these rules are running correctly, and then turn it back on. But for me, for my whole business, right? I do not have any of my clients on auto add. We always just have that 1 microsecond of a review before we add it. So all this is to say, if I click save, you'll see now that this rule is created. So now I don't even look at this, right? I already know that I put the correct payee, the correct category. I can just go add, and move down, right? Move down the list. So anything that's a dues and subscriptions, right? Like the QuickBooks payments that we've been talking about so much, your Canva subscription, your rent that you pay, what else do you have going on? Your utilities, anything that is always going to the same place, like even your Starbucks, right? Like if that is always meals with clients, if that's like your hot spot that you go for your meals, that's something you can make. Place expenses and income that's always from the same person or the same business for the same purpose. All right. So this tool, I wish that I could show you some of my clients' accounts because I have rules for most of their all of their regular transactions so that I can just go add when it's time to categorize. Okay. That's going to save you tons and tons of time. So go ahead and I want you to make, how about 2 different rules? See if you can make a rule for an expense and see if you can make a rule for income. Okay. This is a refund, right? This A1 rental, he got a refund for maybe he returned his equipment early, right? A couple hours early. See if you can create a rule for what happens when A1 rental is a deposit instead of an expense. All right, 3 more minutes. Huh. Marguerite, I'm not sure. Where you are stuck. But I just put the test drive into the chat box again. And where we are right now is if you're on the black toolbar, transactions and bank transactions. This is where we're hanging out right now. So see if you can get there. I'm sorry that you are stuck. All right. And Tanes, about personal and cash, we're going to talk about that at the end. Personal expenses. I've got that on my to-do list. And AZ Handyman Solutions. So you can, how do I say this? You can get all of your receipts obviously from QuickBooks, right? Export. But it's going to be a lot of moving things around, like you can see. So you can export these, and also these. But I would just want to have everything in a nice, neat place. So even if you kept it in kept it in Google Drive and then upload it from Google Drive, right, to have it in 2 places, I don't think that that would be much more of a lift. That might be a solution. Or explore with the export and see if that's bringing in everything in a way that you could still, if you had it, like find the receipts you need when you need them. All right. Good, Margarita's good. What's with everyone having meetings today? Jeez. See you, Tony. All right. Think that I have answered everyone's except for personal expenses and home office. Cool. Tags, good. Far, you get a gold star today. So tags, let me get to them. Where are they? Why do I not have tags in here? So tags, huh, that's odd that they're not here. So tags for most of you, you should be able to see, I guess not in the test drive, maybe you must be in your True account. You should have another option right here called tags. So tags is basically a way for you to track different segments of your business. So for example, if you wanted to track if you have, let's say, 2 locations in your business and you wanted to tag your expenses and income from one location versus another, you could create 2 different tags, one called Charlottesville, one called Richmond, sorry, uh, and be able to differentiate between the two. Um, a more sophisticated version of tags is available in the Plus subscription that we call classes and locations, that does largely the same thing. But really, what tags are is to take your business. If you didn't want to have different accounts, right, going down, you could have tags that would be able to split it up almost into columns with your reporting to be able to see different areas. Does that make sense? I hope. All right, we're going to keep rolling. We have one more main place to go, and then we're going to talk about your monthly workflow and then answer some more questions. Okay. All right, so now we're going to go to reporting. Like a lot of you have asked, where does this information go, right? Like what I'm adding these, right? I'm just going to add a bunch so we can have some things in the I'm adding these, but like where in the world? Obviously, you guys aren't going to do this fast, right? On your real books. All right. You could also batch match it, right? If I go like this and then accept, that's more efficient, right? All right, so we're gonna go to reports and standard reports. So something QuickBooks is not shy about whatsoever are the different reports that they are giving you to possibly use, right? It can go on and on and on and on and on. And within each of these reports, these different reports, you can customize to meet your needs. So don't get overwhelmed. The nice thing about QuickBooks is they have already starred the 2 main reports that you're going to be wanting to be looking at, either monthly, quarterly, annually, depending on what your business needs are. So the first thing we're going to look at is your profit and loss. And QuickBooks is, you can see here, right? QuickBooks is embracing AI, so they are definitely take it with a grain of salt what they say, but it might be worthwhile to be looking at what their analyses are that they're finding for you. A free consultant, hopefully. So your profit and loss is the short-term health of your business. It starts with your income, right? So this is all of his different ways that he's bringing in money, total income. Then I have my cost of goods sold, the products that I needed directly related to the projects that brought in this income. And then I have my expenses, all of the expenses I need to keep the lights on in my business. So for the person who asked about like the income, like where are the 5 categories, your profit and loss is your income and your expenses. Okay, and those are those 2. The balance sheet is going to be the other 3. So that's why it's important when you create these accounts that you're putting the right account type. Okay, we don't want to have expenses on your balance sheet. The very bottom is your net income, right? This is your profit. This is the number that you're going to want to look at to start thinking about estimated taxes, right? So as a business owner, as a self-employed individual, you aren't getting your taxes taken, your income taxes off of a W-2, right? Unless you're an S corp, yes. But you're responsible for paying those estimated taxes quarterly if you're making money, right? So a good rule of thumb, a basic rule of thumb, something that you should consult your tax professional with, based on what your income level is, based on your tax bracket, but ballpark about 30% of your profit, this last number, this bottom number, income minus expenses, should be saved and then sent quarterly for estimated taxes. Okay. If you're in the negative, right, he doesn't need to send anything because he's at a zero. He's net zero. He's below net zero. But if not, what I tell people is on a monthly basis, check out your P&L, profit and loss, look at your profit, take this number, multiply by 0.3, right, 30%, move that money into a high yield savings account. And when it's time to pay your quarterly estimated taxes, that's when you send whatever that profit was, that 30% of your profit for the quarter over to the state and the Fed. Okay, that by moving it to a savings account where you can earn interest, then you're making a couple bucks while you wait to send that over. Okay, that's my nerdy recommendation for you. So while this is great, right? This is his profit and loss for the year. You can move this report around to be able to look more deeply at what's going on in your business. So this is my favorite way to look at this. So I switched to classic view up top. And then I like to change my display columns by months. And so now I can see the trends over the entire year, right? And make more informed decisions. So it looks like he just started his business in May. So I'm already pretty impressed that he has brought in $10,000 in a couple of months, like just starting from the ground up. Some of the things I'm noticing, maybe he decided to discontinue pest control, right? This must be a refund. Maybe he's going to stop doing that. I'm looking and seeing, are there any outliers? Anything that I'm like, ooh, you're overspending here, right? What's going on with this rent and lease? Is this something that we need to budget for moving forward, right? Here's a problem, this one. Like I had mentioned earlier with the uncategorized transactions, right? The uncategorized expense, uncategorized income, we want to avoid miscellaneous. This is the same deal, right? What does miscellaneous mean? We want to find a home for all of these so that you can get the tax deduction easily. Okay. So that means clicking into here, figuring out what is this. Let's move it to, I don't know, does he have a contract? No. Yeah, cost of labor, right? And I can save. Okay. So thinking about how you can adjust within your reports to make this more informative. Me looking at this is a little bit overwhelming, right? I would want to consolidate some of this income, some of these income streams. But it's pretty great, right? You're able to really see a lot of trends. And this profit and loss, this is largely what is on your 1040 Schedule C. So if you print off that 1040 Schedule C and you make your chart of accounts look like that, then it's as simple as dragging and dropping these numbers, these totals over here, when the time comes. Okay. The other report that is really important is your balance sheet. So if your profit and loss is your short-term health of your business, right? How money is coming in and leaving your business. Your balance sheet is your long-term health, right? This is like a time capsule of your business. So we start with our assets, right? What the balances are on your bank accounts. This is great, right? This makes me happy to see that he has $5,000 in invoices out there. Hopefully he's going to bring in some cash. Your inventory assets, undeposited funds. This is a little concerning to me. So what this means is that he has recorded invoices as received payment, right? He's received payment for them, but they haven't hit his bank account yet. So we haven't matched them. So I would be wondering, where is this $2,000, right? He's got his truck on here, all these assets. Great. He's got $21,000 worth of assets. Then your liabilities, right? We can see your loan. His bills, his credit card, loan. He's got, I'm not sure what this is, but he's got another bill or a loan to pay. Another loan. Oh gosh, right? So he's got a lot of liabilities, more liabilities than assets. That's not ideal. And then you have your total for liabilities and equity, right? So we can see, and his equity is low. I'm a little worried about Craig. He's got to get it together here. But you can see what's going on with your assets, liabilities, equity. This is also where you would have your owner's draw and owner's investment. I'm not sure why they don't include that for here, or you would maybe have contributions, distributions, however, whatever language you want to use. Okay. For this is sometimes I used to say that looking at this quarterly would be sufficient, but if you have a lot of loans and liabilities, you want to be tracking this pretty closely, right? We want to make sure that you're able to repay all of these liabilities with the profit that you're bringing in. Okay. All right. So go ahead and check out the profit and loss in the balance sheet. If you're like, Jamie, I've been doing this for a while, I know my way around these two reports, go ahead and explore some of these other reports and see if they could be beneficial for you. Like the P&L as a percentage of total income, this one's really eye-opening, I feel. If you have a problem with receivables, right, maybe look at the accounts receivables aging summary to see if that would be something beneficial for you. And then if you like a report, if you're on your own, right, click on the star. Come on, QuickBooks. And it will come to the top for you. Okay, so that you have these and you can kind of ignore the rest. All right, 3 minutes to look at your reports. And then we're almost done. Oh, Fari says that when you create a rule, you will see the tags. Let me see. Hmm. I'm wondering if you're on your own, Fari. Yeah, we don't have that here. All right.
Jamie, I would like to just triple check that we responded to everything in the Q&A.
Yes. Yep. So Sean and Elizabeth, we just talked about the 5 assets and the 5 types of items and where they come in, right? So your income and expenses, that's on your profit and loss, and the other 3 are on your balance sheet.
Wonderful.
Good.
And the
We're going to talk about that
okay.
at the end. Yeah.
Awesome. Just wanted to triple check.
Yeah, of course. All right. So if your heads are not spinning yet, I'm hopefully going to put everything together for you in a nice, neat package so that you can figure out how to make this monthly workflow work for you. All right. So this is, again, this is bare bones. This is if you're just using it to keep your finances up to date, if you're not doing bill pays in here, if you're not doing payroll, all this other stuff. This is the bare bones. This is what you should do on a monthly basis to say you have up-to-date books, right? So, number 1, you're going to come transactions, bank transactions, and you're going to categorize everything. All right, let me get a couple more of these done. Match. What in the world? I'm going to get these all to 0, right? I'm just going to say they don't want me to. All right? I want all of these check marks. I'm going to disregard this one for now, okay? Your next step is something called reconcile. Reconcile is right here. As you probably have seen, right, all of the major things that you're going to be doing on a monthly basis are right here, right? We have our chart of accounts right here, our bank, creating our rules is right here. And now your receipts, if you're going to use QuickBooks for receipts, it's right here, right? They are trying to make it simple for you. We're going to click reconcile. Reconcile means making sure that what is in QuickBooks balances or matches what's in the bank. All right, it's just a fancy word for balance. So what you're going to do on a monthly basis, and I recommend when your email or your snail mail comes in that has your bank statements, your business bank statements for the month, have that be your cue to get into QuickBooks. Okay. So you're going to come in, you're going to categorize everything in the banking tab, and then we're going to reconcile. So things that we reconcile: checking, savings, all your credit cards, your loans, really your checkings and your credit cards to have those accurate books, right? So we're going to get the bank balance. We're going to get the checking statement, and on that statement, it tells you the beginning balance. You should have the same beginning balance on your checking statement that is on QuickBooks. So it should say $5,000, right? If it doesn't, that means that you fiddled with something and changed something that caused that to happen. If that's the case, you can go to history by account. Again, it's not going to show me anything, but it will show over here where it says changes, what's been adjusted that might need to be adjusted back. Sometimes it'll say it's off balance and it's not. It's just that you move something around and everything is still okay. If it says that it's off balance, put in the ending balance anyway and see what happens. Okay, sometimes everything's fine. So statement ending balance, you're going to look at your statement. I don't know what it, right? This is all fictitious. I don't know what the ending balance is. I'm going to say $4,000. And then you're going to put the statement ending date. So that would be last month, 8/31. And I'm going to click start reconciling. Now, typically, right, if you have clean books, everything is going to get selected, everything automatically. You don't even need to do it, okay? And right here, it will say, let me change this so you can see. It will say $0 difference, finish now. Okay, that means that everything in QuickBooks is the same as what happened in your bank, right? We began with $5,000, we ended with $2,049.50. You can conclude that your books at least have every transaction in there, right? You might have the wrong accounts, like you might have categorized them wrong, but everything is in there, which is what we want. That's called audit proof books. Like we want them to make sure that everything that it matches the bank. All right. If it's wrong, right? Like my initial was, this means, right, that I either have duplicates, maybe I added a transaction twice, or maybe I haven't added them enough, right? Like I haven't added everything. If that's the case, and QuickBooks AI is getting pretty good at this point. Like if you have a mistake, it will look like this, right? QuickBooks has like figured out most of it, and then they'll have some that are white and we call them uncleared, right? They don't have a home yet. Then you're gonna wanna go line by line to figure out where the mistake is. So like if I'm looking here, whoa, like this is only 10 cents off. Like I wonder if, and they have the same memo and the same type and the same account, like to me this seems, maybe Craig added it twice, right? That would be my inference. Another thing to look at, two other like tools to solve the mystery, is this rectangle, this green rectangle. This means that it came directly from the bank feed, right? We can see books by Bessie, Tanya. Everything else are items that Craig added manually, right? He physically added these checks, cash expenses. That's where, like, I trust the green rectangles more so than the adding manually items. So I would focus my attention on what hasn't been cleared. Okay, it hasn't cleared the bank feed. The final place to look is over here, the cleared date. So sometimes, right, like let's take this one for example, Hicks Hardware. Sometimes these will be added into QuickBooks on 8/29, but they won't clear until uh, September 1st, right, which would move it to the September statement. So if that happens, you can just unclick, right, and then it would, in theory, make this go down to 0. Does that make sense? I would say that having problems reconciling happens 0.1% of the time. 99.9% of the time, you're going to have this green check mark, right? Obviously, you're not going to do what I've been doing with just changing this to the cleared balance, right? You're going to go off of whatever the statement ending balance is. Always, always, always. That's the number we want. I'm just showing you what it looks like when it's correct. Okay. So first step, categorize your bank transactions. Second step, reconcile. Your third step, and I'm going to click finish now, because what that's doing now is it's showing that I've reconciled, right? So I can say, yep, that month is done. Okay. And you can see, oops, you can see here, now I'm ready for the next month, right? So they added the ending balance to the beginning balance. And so when September's over, I'm going to put the ending balance, ending date. All right. Your last step, your last monthly step is to go and check out your P&L. Remember, reports, profit and loss. And maybe do it for I wouldn't do, you can do the year to date, but really last month, right? What's been going on? How are we doing last month? Wow. He's crushing it, right? He's doing great. 10K for the whole year, and he did 8K last month. Like, he's doing wonderful. He's making moves. This is good. And he's in the positive. This makes me feel good. Good job, Craig. Taking that number, your net income, multiplying it by 0.3, moving that portion over into that high yield savings account, tax savings account, whatever you want to call it, for the time when it's time to pay your taxes, your estimated taxes. All right. And then you're done. You're done for the month, right? You're good to go. So that is all I have for you. I have on, let me see if there's any questions regarding the workflow. So Jamari, good question. Jamari says, I use Square for payroll. Can this be integrated with QuickBooks? So yes, there are tons of integrations that you can do with QuickBooks. Okay, Gusto, Square, Shopify, all of them, right? They all talk to QuickBooks right now. What I would say is, if you integrate, you need to give it some time in terms of where the coding goes, right? So what they'll say is, yes, come on over, come onto QuickBooks, but you want to make sure that, like, your liability account in Square is exactly the same as your liability account for taxes in QuickBooks. Otherwise, it makes a big mess. There's lots of hand holding. You just need to make sure that you set it up completely when you integrate, and not just like click the button and think that everything's going to work. Okay. Safari says, how many times do you reconcile? So just on the monthly basis, right? We want to do it when you have the statement. So you're doing it 12 times a year. And I would say I wouldn't feel comfortable filing your taxes until you have reconciled through the end of the year, right? So with credit cards, you don't get them at the end of the month, right? Sometimes you have mid-month payments and due dates, and so you want to just go through that last credit card statement so that you have all of 2025 reconciled when it's time. Olga says, this is so complicated for a child psychologist with my own practice. I'm sorry. I think, Olga, if you can put on your like tunnel vision, that that you can get used to this. I mean, if you think about with QuickBooks, you probably only have a checking, right? You don't have all these other things. I think you could use self-employed definitely if you want to. It's not my favorite, but explore it, right? See if you like it. If you feel like you can do it successfully, why not? Yeah. um, Safari says, if we make a mistake, can we correct and reconcile it again? So this is a weird thing about QuickBooks is, so you only if you're a accountant user can you unreconcile. So instead, what you would want to do is just make the correction, and then it will self-correct the bank balance for you. So like say you deleted something from August, right? And you would and now it's off balance. If you just add it back, it will say that you're balanced again. That's the easiest way to do it. All right, let's talk about personal expenses. So obviously, I don't encourage you to purchase personal things on your business account or purchase business things on your personal account, right? We don't want to commingle. However, I get it. It happens, right? And that's if that's the case, right? So if you purchase personal things, items on your business account, you can just put that to an owner's draw, right? Your business purchased something for you as a um as like basically payment, right? Um, that is fine. That's standard. So like if you go out and you put a fancy restaurant on accident on your business, put it to owner's draw and it goes to your equity account, right? So it's not on your profit and loss and you don't need to worry about it, right? It's taken. Basically, it's like your pay. It's part of your pay. That being said, still try to avoid it, right? We want to have clean books and that makes it a little bit messy. If it's the other way around, that you purchase something on your personal account that's for business, we need to import that data, right? So to do that, where do we add new information? Over here, the plus new, or I guess in the new one, plus create. And we're going to add a journal entry. You will put the date that it occurred. I like to put here in the journal number, I usually put the date and whatever it was, right? Say I bought a computer. Now, for journal entries, this is getting, right, a little bit complicated, a little bit overwhelming, all these lines and stuff. And so what I recommend that you do is you can, if you need to, you can Google debits versus credits cheat sheet. Let me, right, and you can see here something like this. That shows you when it increases or decreases, right? So an expense debit increases the expense, an expense credit decreases the expense. So this would be like a refund, right? So say I have, he doesn't have any of the ones I want. Geez, what does he have for a computer? I don't like any of these. I guess office expenses. Okay, so I bought $1,000 computer. So the debit, if I go back here, is going to increase the amount of expense I have, right? And then my credit is going to be, and they don't have this here, owner's investment. You should have it. Most of them have this. So owner's investment is an equity account, an owner's equity. And I'm going to click save. So what this journal entry is doing is it's adding this data to your account. So I'm saying that office expenses, it cost me $1,000 for a Mac computer for the office. Okay. And that I paid for it from my personal account. And I might put like paid for on Capital One credit card. Okay. I would add an attachment, add your invoice, right? Or your receipt, whatever you have. And then if I save and close, it's now added to my profit and loss here, right? This is the $1,000 and then I had $18 of something. Mahogany mugs, right? So you can see it's right here. And then it's also going to be on my balance sheet under owner's investment, right? That I've invested $1,000 of my own money into my business so far this year. Okay. That goes for cash too, if it's personal cash, right? Now, you can add a petty cash account under bank accounts. Okay, you can add it as a current asset. What I'll say about that, I saw that as a question. You want to make sure that you keep it up to date, right? That having a petty cash account where you have to manually, you would add it the same way, right? Or you could actually add it as an expense with petty cash. But we want to make sure that it's always reconciled so that you don't have, it doesn't say that you have $2,000 of cash, but you only have 200, right? That's one that I see a lot that gets out of control. So if you can try to avoid cash, unless you have a business that has a lot of cash going back and forth, that would be the way to do it. And if you do have a lot of cash going back and forth, then you would want to reconcile that petty cash account as well. Okay. For home office, yes, you are right. I'm just trying to find the question. Home office. Is there a percentage you could write off for your living expenses, i.e. mortgage, electric, water, phone subscription bills? Yes. So there's two, the rule of thumb is that home office needs to be an office or a space that is solely used for business. Okay. Back in the day, they would knock on your door and make sure to see it. I don't know if that still happens now. I haven't had that happen to me yet. But so it can't be like a bedroom with a desk. It can't be a dining room table. It can't be an office island, a kitchen island, that kind of thing. So, but the benefit of having it is that the percentage of the actual home office space compared to your home square footage is what you do get to deduct in terms of mortgage, insurance, property taxes, electricity, water, phone, all of those things. So if you can devote a space in your home for this, it's very beneficial. And what I do is I keep a spreadsheet outside of QuickBooks that keeps track of these expenses on a monthly basis. And then I do the math at the end of the year and then cut myself a check for that so that it shows as an expense. You don't even need to, if cash is tight, you don't even need that to do that necessarily, because that's something you could tell your tax preparer or add into TurboTax, that was the home office deduction to take that. Great question. Wonderful way to save on taxes if you have it legitimate. So I would say I would just try to make it so that it's a work only space. That's their big caveat. All right. Yay. Sharon's come to 201. Yay. Good. Dan, did I cover the personal banking enough? Oh, so I have manually entered things as cash instead of the bank account. Is that too messy? Can you tell me more, Dan? If you want to even unmute.
I don't think that feature is available for
Oh,
people. Yeah.
oh, how rude. No, I'm kidding. So if you use the cash account, what you really want to do is just make sure that it goes both ways, right? So if you collect cash, like if you're a restaurant and you're collecting cash as income, sure, right? The income comes in, you're going to create another journal entry to recognize the cash that comes in, right? Because Square and Stripe, they're not giving you that cash. But you want to do it the opposite way too. So if you're going to the bank and you're giving them that cash, we're going to categorize that as cash so that that lowers that cash account because now it's in the checking account. Do you see how this can get really complicated really quickly? If you have these personal banking transactions, I would always do it as owners, as a journal entry with owner's investment, because we do want to recognize the income that you're bringing in from your personal account, basically like fluffing, right? Like giving your business more of a chance, right, to succeed. So we definitely want to. I would do it that way so that you can see that on the equity accounts that was an investment. If you do that too often, you're like, oh yeah, my business is fine. Like I have all these expenses, we're doing fine. But really, what we're doing is we're robbing Peter to pay Paul, right? So we want to make sure that your business is truly successful by recognizing that, oh, you actually invested 20K into your business last year, not that this cash just magically appeared. And so Dan, yeah, so that's totally common, right? When you first start your business, you pay for everything up front. You can even create a journal entry. Let me get back. So same deal, right? So what did I put this to? Office supplies, right? Yeah, office expenses. So you can create several of these, right? And at once. So this is the computer, this is the desk, this is the Squarespace website, this is the business license. Okay, I'm going to change that to whatever. Okay, and then you can have the owner's investment here. So if this is 100, 100, does that make sense? And then you're able to still recognize this will all be the investment that you had. So I would do it that way. Otherwise, if you do cash, it's just it almost assumes that cash just magically appeared. We don't want that. We want to make sure that you're showing that this is the money that you put into your business. Okay. AZ Handyman Solutions. If you have one internet connection for the house, do you put the whole monthly bill as an expense or part of the bill as it's used by the whole family? Yep. So you would want to do the same ratio unless you can justify that you use it much more for your business. So that is like the percentage of use. So if you have somebody working out of your home that literally is on the computer all day long, then you can absolutely justify that like 80% is business, um, and 20% is home. Fari, good question. This is confusing. My business is not cash, but it has been as accounting method as cash. Is it too late to change it? So cash is most common for most business owners, small business owners. I'm cash, right? Almost all of the books that I do are cash. What cash means, right? This is an accounting method. Cash means that we are recognizing the money when it physically enters and enters and exits your bank account. Okay, so when it enters and exits the books. And so you can see here, this is a great example, right? So when I showed Craig's income was for last month, remember it was 8,000. Well, when I do cash, yikes, it's only 4,600, right? Because do you remember that accounts receivable we saw on the balance sheet that showed that he needed like 26 $100 in receivables, right? Outstanding invoices. That's why, right? He only actually got $4,600 in cash over the last month. Okay. Even though you file your taxes under cash, right? You will do your P&L under cash when you file your taxes. It's very helpful to be looking at it under accrual as well. Like you can kind of flip flop if you need to see, wait, I actually secured $8,000 worth of sales in August, is what this is saying, right? Same deal if I'm on my balance sheet. If I'm on accrual, I can see this accounts receivable. Yeah, 5,200, right? He needs to call. But if I turn it to cash, it goes away because we're in cash, right? So that's a really good point. So I would say, right, you should, and I guess this is I'm at fault for not pointing that out. You should be changing this most likely to cash to see what actually has come in for the month. For a lot of you who are using a payment processor like Square or Shopify or receiving checks, if you're not invoicing through QuickBooks, then you'll see the same number regardless, right? Because you only have cash. We're not recording your invoice. This is mainly invoicing specific in QuickBooks. Okay. Let's see, that makes sense. Yep, Deanne, you're great. You're welcome. Can I see the accrual as well? Even. Yep. So Fari asked, can I see the accrual report as well, even if it's not set up for? Yep. This is standard in QuickBooks that you should be able to click in between. That's the standard feature. Ooh, okay. Renee asks, I get almost daily deposits for credit card sales from my credit card merchant. I use a separate system for my business sales, movie theater with concession merchant tickets. How do I get the information from that system into the QuickBooks? I also use paychecks for payroll and need to put that into QuickBooks. I have gotten so far behind because I don't know how to enter these. Yes. Whew. So Renee, I would explore the integrations, right? Because you have a lot going on that is important to keep track of. And however, if you don't want to use an integration, what we're going to do is you're going to need to split up your deposits, right? So if I am, let's pretend this is not a refund, this is a credit card deposit, right? and it's $200. I'm going to split this transaction, and if excuse me, and if you have daily deposits, I would either think about possibly switching that to weekly if you can cash flow it, or you're really going to want to get the integration because this will be a lift, okay? Because the $200 that you get from Square, Shopify, PayPal, wherever is not $200 of income, right? It's actually $150 of income, $3.50 of fees, $2 of sales tax, right? There's a lot of different things that this is made up of. And so what you'll want to do is split it up. So I'm going to say this is $80 of pest control services, right? It's $100 of um, let's see, design income. And then it's, again, I'm just doing these numbers big because they have to be. Where's the payables? It's $25 of sales tax, right? And then it's a $5 fee. He doesn't have any of the he doesn't have any of the accounts that I would have. $5 fee for the merchant services. Okay, and so that's how you would want to manually split it up. So for you, right, this would be ticket sales, this is concession sales, this is your sales tax, this is your merchant fees. But obviously that's going to be a big lift if you're talking daily. So another option that you have, we're running out of time, is you
I
could
was just going to say that. It's okay if we're like a few minutes
okay.
over.
Another option you have is you could put this to a clearing account. So you could put all of, let's just pretend it's Square, right? You could put all of your Square income to a Square clearing account, and then you could do a journal entry monthly, like we have done, right? This is really a great way to move money around, or like totals around. And we'll talk a lot more if QuickBooks 201 might be the place that you need to join me. Where you can then do a lump sum, look at your sales summary report for the entire month, and then move those totals where they need to go. Something that is a complication for that option is that sometimes you'll get deposits that come after the first of the month, but they're for sales from like the 31st, right? And then it wouldn't clear out to zero, which we really wanted to clear out to zero every month. So a couple of options. I think if you're doing daily deposits, then I would check out the integration first, and then you can decide between maybe doing a clearing account and doing a monthly journal entry, or splitting up these deposits, maybe switching your deposits to weekly instead of monthly. You have options. Also, I don't know if we even said, if you want to get on my calendar and meet with me to kind of problem solve this one-on-one, that is an offering within this webinar. So know that you can reach out to Lena and she can get you onto my schedule to talk through some of these in the weeds QuickBooks questions more thoroughly. And that's an open invitation to everyone. Okay. So Taines asks, there's a challenge if you integrate income from POS and linking income from the bank account. This is going to be a duplicate. I am confused how to bring both income and QuickBooks and distinguish them without duplication. So no, you're actually not, because what's going to happen is, do you remember how we had all those matches? Like, let me undo this. So when QuickBooks integrates with Square or most other ones, it's coming. Oh, come on. I thought that was a match. Let's see. Here we go. Okay. It will, let's see if one of these work. What in the world? It didn't do it. Do you remember how it had match though? Right? It will talk to QuickBooks and this deposit will match it to all of that more in-depth information. Okay. Again, you want to give it some time. You want to make sure that you have an hour or two to sit down and see what's going on. You don't want to just integrate it and then walk away for a couple months, right? We want to make sure that it's working correctly. Boy, you guys were great. You all are thinking very deeply about your QuickBooks files. I can tell, I can feel it. You've got this. I know it's complicated. Again, they try to make it be the one-stop shop for all businesses, and you have to tweak it a bit so that it works for your business. Okay. Again, use the Capital Pathways program. We're here to help you. Be happy to reach to meet with any and all of you if you have any questions, even just to have a sounding board. All right, Lena.
All right. Well, I would like to thank Jamie very much for her presentation and for taking everyone's questions. It was very helpful. And I would like to again reiterate, if you want support or one-on-one time with Jamie, you can reach us at the link that I sent on the chat or via email. And we'd be happy to help. Again, thank you everyone for coming. Hope to see you on the one-on-ones or QuickBooks 201, and have a great rest of your days. Goodbye.